Hello, everybody. See, can you guys hear me right now?
Yes, we can.
Okay, great. It's always good to do the sanity check before things start.
So how's life post Intel career, Daniel?
You know what? It's every bit as busy as it was with Intel, which means it must be me.
Yes, I'm sure you have so many things going on. You shouldn't be worried about how to of getting bored or
Yeah, no, I'm not getting bored over here. In fact, I don't know if any of you, for those of you who have tried to call me, you should know that my phone service is changing. So I've been 2 days without my phone while waiting for a new SIM card to arrive.
Oh.
But we're busy. My wife is heading out to see some family this weekend. I'm hoping things go well, Sean Denis, with my mother-in-law arriving right in the middle of the meeting here and bringing a dog over for me to care for the weekend. I'm not going to step away, but I have a friend who's going to answer the door. All right. How's everybody doing this Friday?
Doing good, Daniel. Thank you.
Good.
Why do we have two Daniel Holmlands on the call?
Oh no, is there somebody else?
Actually, three. I'm seeing three over here.
Oh, they must have joined with the link that somehow, they pretend to be you.
Yeah, no, I think I originally sent out a non-registration link, and about a day or so later, I modified that. So, so we might have a couple of Daniel Homlands on the call here. Welcome. We do have a Facebook group for those of you who are interested. Only Daniel Homlands can join it. It's me and like 4 Swedish guys. I don't know what they're talking about because they talk in Swedish all the time. And that's actually the truth. There is a 5-person Daniel Homland Facebook club. All right, we'll wait for a few minutes while people are joining. And I would love to hear how are people doing? How is your weekend? Anything exciting? I see Glenn, you're still mired in taxes.
It's the gift that keeps on giving, so I figured I'd give it a couple of extra days of recognition.
Right.
Maybe I'll keep it up until my my extension is over.
Extensions, always fun.
Or at least until you receive your K1s.
Yeah. Yeah, it's very frustrating. There's CPA. We've got about half of our K1s out, and the CPAs still have the other half.
I'm doing better than last year. I'm only waiting for one.
Oh, is it me?
No, not you.
Oh, good.
If I pay extra, can I get it faster so that I can pay the taxes faster?
You want to pay your taxes faster?
Don't we all, as true blood Americans who want to help society?
No.
I obviously have more to learn from this group if I still believe that that's a good thing.
All right, I'm hoping some more people will join here. Hey, how many of you today, just show me a show of hands in the actually in the chat. How many of you found this link from the Zoom link that I left on meeting.intel.com? If you put a 1 into the chat, if you came to this meeting that way. All right, 2 if you came to the meeting through Google Calendar or the calendar invite. Oh, you forgot. Okay, good. So it sounds like that calendar invite's getting out. 1's coming in there. 3, if you came in through the Facebook group. I know there's not a lot of traffic on the Facebook group right now. Maybe none. All right. Well, we'll give it 1 more minute and then we'll get started. Oh, we've got a pending request on the Facebook group. Okay. Thought I checked that just yesterday and I didn't see it. Okay, I'll look for it. All right. So today is actually a fairly big day, as you know, as a lot of you know, actually, because of a wonderful gift card that I got. Last week was my last week at Intel. And so we are officially now a public group. And our new group title is the Alternative Investing Club. Let me share my screen here for just a moment. I want to make an announcement about where the club's page is going to be going forward, and then we'll get right into the talk. Excuse me. All right, so it is just the beginning of a web page here, but if you go to alternativeinvestingclub.net, and I will drop that into the chat right now, we've got our initial web page here. And so the things that you'll see on it, at least for now, are this link right here that says details for this week's speaker event, or you can just scroll down right here for the details of the speaker event. So anytime you want to know who the next speaker is, you can go to this webpage and find out. You can also register to attend right here. And the other thing you can do is come down and see our upcoming meetings. So we've got a couple of people that are scheduled here in the future. We're going to be hearing from Jimmy Edwards next week and Sharon Vornhorn about probate, and then Karen Hall with a talk about supercharging your retirement with alternative assets. So I'll drop that link in the chat right now. And this is part of my promise to you to turn this club into a world-class club. We are going to grow and expand this club publicly now that we are public, and we're going to be expanding it both on Facebook, LinkedIn, but also just in general with adding professional services to it. So we are today, Sean Denis and I are announcing the first coaching group that's going to be a part of this club. But in future weeks, we'll have other coaching groups and other people who are coming in as an official part of the professional services to the club. So stay tuned for those announcements. One of the other things that I wanted to announce too is that I've spoken with a number of you who are interested in, since we were at Intel for so long, we had a no solicitation policy, but some people in this group actually want to hear 506C and other public investment opportunities. And so we're either, and I'll probably send out a poll based on this, but we're either going to dedicate 1 Friday a week to bringing in somebody who has an investment. And so you'll actually see instead of showing an educational talk, you'll actually see, hey, here's an investor presentation. And I should say the club does not endorse these meetings. These are people that were suggested to me by you or somebody else. So there's no endorsement by the club of these meetings, but it's great just to come in and hear actual presentations to investors. So we're either going to do that on 1 Friday per month, or perhaps we'll set aside another time, like a Tuesday afternoon or Wednesday. We could do some polls to figure out what's best. Actually, why don't I just give it a quick informal poll right now? How many of you are interested in hearing from people who actually have an investment product? And how many of you would rather keep it strictly educational? 1, if you're interested in the investment. 2, if you're interested in strictly educational. All right, wow. I actually didn't expect that many ones. Okay, so we'll bring in some high quality potential investments into the club. Yeah, no. We're going to try and weed out the snake oils, man. We've had a couple that have been kind of heavy on the sales pitch, right, in our club so far, and I try my best to weed those out. Okay. All right. And then 1 more quick poll. If you like doing it on the normal Friday time at noon, put a 1. We'll dedicate 1 Friday a month to it. If you want to find a different time, 2. All right. Oh, the club spoke. All right. That was easy. I don't need to send a poll out. Right. All right. So with that, Sha Den and I are going to talk about the first coaching service that we're making available through the group. I expect that as we grow as a group and as we diversify into more asset classes that are passively based, that we'll bring other people in that are providing services. But I do want to make sure that everybody understands that the Friday speaker meeting at noon will always continue. It will always be free. And it sounds like we're doing educational most of the time, but we'll be changing at least one of them to being a non-snake oil investor presenter. All right. With that, Sha Den, shall we get started?
Let's do it.
I know we practiced our group, our talk here quite a bit, and I just blew the first 10 minutes of it. So my apologies for that.
We'll make up for it.
All right. So this talk is about unlocking the potential of real estate investing, even with a busy schedule. And as I've talked to more and more of you, I've really understood that your heart here is in passive investment. It's not even necessarily in real estate investment per se, although that's a great vehicle for passive investment. We've been talking about bringing in solar, oil and gas, potentially exotic animal breeding, all as passive income mechanisms. But today we're going to talk about how you get started in real estate. And so our agenda quickly here, we're going to go through an introduction, give a few words on why real estate. I don't think I really need to convince too many of you. You've been here. Many of you are regulars. And then we'll talk about the challenges of real estate. This is really interesting because I talk one-on-one with a lot of you. And usually, especially when we're first getting to know each other, I hear what your challenges are. And so we're really designing this program to focus in on those challenges and to create a pathway for you to get over them. We'll give a quick introduction to how Sha Den and I started on this journey. We both came down very different paths, and then how you can do it, and we'll introduce our coaching program. All right, so here's the slide. I think you've seen it in various incarnations throughout various presentations, but a little bit about me. My name is Daniel Homand. I'm a double major in electrical and computer engineering. I've got a degree in economics. I spent 1.5 years at the Chicago Board of Trade actually standing in the pit. Yeah, well, half of that was standing in the pit and half of it was up in an electronic trading room. And so I saw firsthand how bonds are traded. And the 10-year bond, for those of you who don't know, is the bond that sets the direction for the mortgage market. Mortgages and mortgage-based securities are all based on the 10-year bond. And so it was fascinating and honestly kind of terrifying to see up close how the market, how people traded on the static of the market and just how the market worked in general with large groups bringing in orders. After that, I decided to do something a little better with my life. I bought a couple of rental homes in 2002, 2003. Then I moved overseas. I was part of a volunteer group working with literacy in France for 3 years. And we published an electronic library that went all over Europe and Africa and different areas. But I funded my family through donations that people gave. And also I did hard money lending on the side that provided me with some extra income. And that worked really well until 2008. 2008, my lender called me up after me trying to get a hold of him for about a month. And, or I'm sorry, not my lender, my rehabber called me back. And he said, hey, I can't give you your money back. The market's crashing. And so I ended up with the property at the end of it. I held that property and managed it remotely. It was a property in Florida, Sarasota, Florida, to be exact, for about 7 years and sold it in 2015. Took about 1 year off of real estate, but I've got the real estate bug. So I gradually started getting back into real estate and learning about syndications. And in 2017, I invested in my first limited partner syndication, which was a 56 unit down in Houston, Texas. I put 75,000 into it. And a year later, I decided, hey, I really enjoy this. I want to get involved as an active person. So I founded Good Samaritan Capital, which at the time actually had a different name, but it's Good Samaritan Capital now. And I named it that because I want to keep front and center that it's about community and about helping people. So I named it that with the specific point in mind to give myself a constant reminder. Since 2018, Good Samaritan Capital has been a part of 2,643 multifamily unit acquisitions and 204,000 square feet of industrial space. We are currently in the middle of our 14th offering and have been proud to bring about one investor project per quarter to our investors. And with the exception of Q4 last year, where interest rates and uncertain market environments were making it a challenge. So, and it's of course better not to bring something forward rather than to just do it for the sake of doing it. That's my quick talk, or who I am. Shandini, I'll pass it over to you.
Thanks, Daniel. Do you want to put it in the slideshow mode?
Yeah.
Great. Hi, everyone. My name is Chandni Dhanjal. I'm a mom to two beautiful girls and a caregiver to my 93-year-old grandfather. Here in this picture, you can see all my lifelines. I moved to the US in early 2000s and earned my bachelor's from UCLA and master's from Stanford. And ever since, I have been living, working in the Bay Area. And for most of my corporate career, I have been in product management space in tech companies in the Bay. And it's kind of hot off the press. I'm super excited to share with you all that I just left my corporate job, very much like Daniel, a few weeks back, to finally spend most of my time with the family and also to pursue my passion in real estate full time. I'm also CEO and co-founder of Weissment LLC. It's a real estate investment consulting company that offers full suite solutions to busy professionals, and it has helped hundreds of newbies in tech industry with their first or initial set of investments. And I'm really expanding my consulting services to the vacation rental market now. I've also been a real estate mentor and coach to several women in technology. Quickly on the investment side, we own over 10 high-end rental properties that span from long-term to mid-term to vacation rental, aka short-term rentals. We have been investing for over a decade now and have properties all across the US. And really my expertise over the years has been really into assessing and managing remote properties. And I love it so much. Not only does it allow us to have assets across the country, it also helps my family to travel, experience new cultures, and all of that while we are making money. So now let's talk about the basics. Next slide, please. Why real estate? So for us, really, this all started, as I said, over a decade back when we first read Robert Kiyosaki's Rich Dad, Poor Dad. If you haven't read this book yet, I highly, highly recommend it. It's such a quick read. Two things that really stood out for us from that book was, number one, Rich focuses on the asset column and Poor focuses on the income column. And number two, it's not the rich, but the upper middle class that pays the most taxes in this country. And I know the taxes piece is very timely with Glenn's background over here. But jokes apart, I want you to think about this thing that it's not the rich, but the upper middle class that pays the most taxes in this country. As a high W-2 income earners, we are paying more taxes than Mr. Trump. This realization was pretty sad and scary for me and my husband. On paper, we had it all, but in actuality, we were not financially free. And furthermore, when we looked at this Robert's, cash flow quadrant, here on the screen, a light bulb went on. Robert, goes into explaining this 4-quadrant approach of making money, where on the left-hand side, you are drawing active income by having a job. You're kind of trading your time for money. As long as, there's a limit on how many hours you have in a day, there is always a ceiling on how much you can draw. And pretty much zero leverage because you're purely exchanging time for money. This is really the worst place to be in. And his point is that we should be striving to move to the right and build a system where money is working for us versus we working for money all the time. And that can only happen when you figure out some sort of passive income stream. So great, this realization embarked my husband and I onto a path to exploring different passive income avenues. Next slide, please. And there were several options out there. I'm sure in this club, you have talked about some of these in the past. I'm gonna hone into rental properties or real estate because that's where the magic happened for us. And I know, Daniel, for you too, this is where your expertise is. So next slide, please. So coming back to the benefits, there are so many pluses to investing in real estate. But the top 3 are, first, it gives you better ROI than most of the other options out there. If done right, it gives triple returns. By that, I mean, A, you can expect a consistent cash on cash return, B, equity building where somebody else is paying for your mortgage, and C, though a bit less these days, but still not impossible, is the appreciation gain. Number two reason, which was less known to us when we first started, but over time has become the number one reason for us and should hold true for several other high-income W-2 households, is the substantial tax benefit. This single benefit helped us personally increase our revenue by tenfold. We went from 30K to 300K in less than 2 years and truly accelerated our mission to financial freedom. So a little tip for you guys is know your taxes. I know in this session, I won't have time to talk about accelerated depreciation, cost segregation studies. You may want to make a note of it, Google it later, but there are some great tax benefits for people, high income people who are investing in real estate.
Hey, Chandani, I just want to say too that this year actually is the first
8%.
year where I will be paying, I think, I haven't set my tax return in, I did the extension, 0 taxes. And I got there through a combination of cost segregation studies and the land conservation easement that we talked about earlier in this club. And so this is a big milestone for me. This year, I'm going to be very close to paying 0 taxes.
That's awesome. Congratulations, Daniel. Cool. And personally, before I go there, quickly, the third benefit is less volatility, compared to other investment opportunities out there. I don't know about you, but my crypto and stocks is taking a pretty big beating right now. And real estate may dip also. Of course, everything is tied, it comes down, but by and large, you can see cyclically that it is going to come back and generally more strongly. And next slide, please. But these are very tangible benefits that I'm talking about. But personally, most importantly, for me, real estate can give me that control, or has given me that control, to be my own CEO and build a lifestyle that best fits my family needs. And this is something you really can't quantify, but it has the biggest impact on your happiness and well-being.
All right, Chandani. So I second what you're saying here. What you're really saying is that real estate's created a path for freedom for you. And honestly, I've been talking to a lot of you on the phone, and it's interesting to see there's all different sorts of real estate avenues that have been represented in this club. People that have done long-term, short-term syndications, land conservation easements, there have been Bitcoin people. There's been a ton of real estate strategies out there. And the problem is, though, if this is such a tried and true method, why isn't everybody doing this? And the reason why is that there's a lot of difficulty in getting started. There are a lot of paths that you can take on your real estate journey. Real estate investment is a wide ocean. And so what that means is that for people that are just getting into real estate, and particularly people that are busy, this has resulted in a lot of high barriers. Most of you are busy people at Intel. You don't have all day in order to research topics. That's one of the reasons why you've enjoyed this club, is because we just do one consistently every single week. And I've learned a ton this way as well. But in general, these are the things that we have seen that have stopped busy people from getting involved in real estate. And it really comes down to time, confidence, and one of the things that I hear the most is proximity as well. And so time, we're all busy people. I have a family that I put as high priority, so I make time. Even now that I'm no longer at Intel, I still schedule my time to go pick up my kids in the morning and the evening or the afternoon. But time to learn is one of those big things as well, and that goes into confidence. This club has provided a lot of people with the confidence to go out and make their first long-term investment, their first short-term investment, their first syndication, their first, we haven't talked as much about tax liens, but mortgage notes, other strategies, REITs. And so confidence is really a matter of being educated, but it's also a matter of having the confidence to pull the trigger and just get started. And that can be very hard. I spent almost an entire year learning about real estate syndications before I started. And that's because I just have the typical engineer mentality of analysis paralysis. I had to learn to overcome that and to be active and to know that I'm going to be learning while I'm being active. And then the last thing that we see a lot is proximity. A lot of people are very emotionally married to the idea that they need to be able to see their real estate and that they need to be able to drive by it. And I think about 2 years ago, we gave away David Green's book on long distance real estate investing. And we actually brought it to the person who brought the most people to the club. Maybe we'll do that again. But anyway, proximity can be a big stumbling block to a lot of people. Being able to know your property is there. And so in this day and age with the internet, you can do all of this over the internet. I've been involved in, like I said, 2,643 multifamily units being acquired, and we've actually traveled to them, but we entered into the contracts before traveling to them. So there are ways to and there are ways to exit from the contracts if due diligence doesn't come through, but you can do all of this over the internet now. And so this is my story on how I embarked on this journey. And I told you this to a certain extent first. I became educated when I was in 2002, 2003. I was listening to, I was commuting on the L train in Chicago, going to that bank and going to the Chicago Board of Trade. And I was listening to Ron LeGrand CDs, and you may or may not know who Ron LeGrand is, but he's an old time real estate mentor. He's been around since like the 80s. He has a series of CDs that are really good and really educational. And so I became educated also with syndications. I spent, like I said, almost a year listening to podcasts before I pulled the trigger. But one of the things that really helped me pull the trigger was having somebody who had been there before. And I joined the Think Multifamily group. I paid $35,000 in order to join that mastermind, where I got an instant network full of people who were busy and active in the business, as well as a coach and a mentor who was going to help me put together my plan. And he was a busy person, but it was a good network. It was a community, a tribe of people to be with. And then lastly, I developed my own plan. Part of this club was, growing my real estate networks. And that has certainly benefited me quite a bit. Setting goals on a regular basis, and then knowing that I wanted to bring one investment opportunity to investors each quarter, and looking and continuing to search until I made that happen. So for me, that's what my plan was. And like I've said before, real estate syndication, I've worked with a lot of you in real estate syndication as limited partners because you're interested in receiving the passive income. You put your money into purchasing an apartment complex like these, and then we give out regular distributions, and you share in your percentage of the sales proceeds, the profits. So my track record is that we are currently on our 14th multifamily complex raise. This one's actually a very big one. We're in it with multiple other groups. We have a total of 2,600 units, and acquisitions have been over 168 million in acquisitions, which of course, the majority of which is held by the limited partners. And so yeah, that is my track record. Oh, and here's a more detailed view of the track record. So we have Camino del Sol, Green Tree Place, Millington Oaks, and Fort Smith that have gone completely full cycle, which means that we've acquired, we've renovated, and we sold them. And we sold them, in this case, we hit our 5-year projections. In all 4 of these cases, we hit our 5-year projections at around the 2.5 to 3 year mark. The real estate market was very hot in the last 2 years. It's slowed down quite a bit this year, and I expect it will continue to slow down over the next 2 years. But there's always good opportunities out there for people who have the right education and know what they're looking for and have a criteria and a plan. So Camino del Sol, we returned 147% in 29 months. Green Tree Place, this was purchased for 19.5 million. We returned 157% to the investors in 29 months. Phoenix Village and Greystone Apartments, this was purchased for 4.8 million, and we returned 177 in 35 months. So that means for every dollar that was put in, the investors received $1.77 out. And this was our 5-year projection that we hit in about a 3-year time period. And Millington Oaks, 7.3 million. This was a little bit of our problem child. We were hit with COVID and with supply chain issues that caused us to fall behind schedule here. But we did return a 138% profit in 25 months. We've also built up a nationwide network of professional groups that we work with. So my company, Good Samaritan Capital, we always partner with a boots on the ground firm that has several hundred units in the area. So for instance, in Phoenix, we work with Rise 48, Gannon Cooper works with our properties out in Alabama and Florida. Grayson Capital is in the Midwest, along with, FTW Investments, here they are, Kansas City. So I've got partners in Idaho, the Midwest, Florida, Texas, Phoenix, and we're continually looking for good people to work with. So that's my background and my track record. That's how I got started. I've loved working with passive investors and buying large properties that have economics of scale of economics, and giving investor returns as we go. A lot of you know the club here, so I won't talk about it a lot, but we've grown this club to, when I exited Intel, to 1,068 people, I believe, were currently the number of people that were receiving education or the notifications for these groups. And it's obviously had an impact, because I received this card from you guys this week, and I got it on Monday this week, and I was really touched. I didn't realize I was gonna get a card like this, and it's been really good to hear how, and I hear this on the phone too, how people buy their first long-term rental or short-term rental, or they just get started in real estate, and they take charge of their financial future and start making their decisions rather than sending money to Wall Street. They're investing on Main Street. And it's obviously touched a lot of lives. So thank you so much for sending this card to me. It's really meant a lot. Yeah, thank you. I will pass it over to Sha Den before I choke up. All right, it's you.
All right, what an inspiring journey, Daniel. Thank you so much for sharing with us. And that card is really heart-touching. For us, for me and my family, as I mentioned, it all started with Kiyosaki's Rich Dad, Poor Dad. He instilled a seed in our mind that we need to have passive income streams to live this financially less stressful, fuller, more balanced life. So, okay, this made sense. So my husband and I buckled up. We started exploring different options, and real estate was one of them. So to Daniel's earlier point, we faced exact same problems, same challenges. Time, we were focused on our career building in our W-2, confidence. We were kind of on and off reading some books, some online content, but that did not feel enough. And proximity. Since we moved to the US in early 2000s, all we knew was California. So then guess what? Next slide, please. We took the safest bet. We bought a property near where we lived at the time in California. So the property was going to foreclose, remember those days? And the price point fit in our budget, time was in our favor, and shortly after closing, the property started appreciating well. And that gave us the confidence to buy a few more properties. And you know what? We humans are very good at giving ourselves the credit for things that go well in our lives. Even though at times it's all situational, it's external factor driven, and we were no different. We were feeling pretty good about the fact that we have now an asset column, our asset portfolio was going up consistently until we got stuck with one not so good investment. This was $600K property that we invested in the Bethany area of Portland, Oregon. You know, we were visiting friends in that neighborhood, fell in love with that place, and we started visioning ourselves to move to Oregon and start our family life there. So we bought a property there. And since we had no plans in place on when and how we are going to make this move, we said, how about we rent this property like many other properties of ours? And we assumed it's going to take care of itself until we are ready to move in that home. So long and short, it was a very high maintenance property. It had a beautiful yard, fountain, and all kind of bells and whistles, and something or the other kept breaking in. And as a result, we had a negative cash flow month over month, year over year, to a point where we decided to sell it. When we put it on the market, we got another shock. We found out that property barely appreciated, as there was a whole slew of high-end luxury townhouses built near this property. And actually, this was going on even when we bought the property, but we just did not do our homework. Well, a huge lesson learned that you cannot be lucky all the time. You better do your due diligence, before you invest. So that was the beginning of like those good feelings fading away. And coincidentally, around the same time, we met a gentleman at a party who later became our mentor and shared with us how he was consistently making $8,000 per month net from his rental properties. And being in California, even though our properties were appreciating, we were not making positive cash flow on our properties. So our ears perked up when we heard this person talking about his, income. And as we started talking with him, 3 big things that we learned from him early on were: number one, get clarity on your goals and strategy. You need to have goals and accordingly formulate a strategy. And we did not have one. And kind of embarrassing for me because I'm in product management, everything in the product world starts with a strategy. So those basic principles that I was doing in my professional life, I never brought it to my personal life. So when I look back, I laugh, but it was pretty embarrassing. Number 2, find your tribe. Be it a mentor, like-minded community. Networking is the key to be successful in this business. And number 3, get out of that, Daniel, what you were talking about, analysis paralysis, and just take an action with a solid exit plan, just in case the things don't go as anticipated. So with this learning and support from our new mentor, we made our first step in the right direction. We came up with a strategy to invest in low risk, high cash flow assets. These were small size properties in Midwest and Mid-South. So next slide, please. With a purchase price of $200K or less, and they gave cash on cash return of somewhere between 10 to 18%. We created separate bank accounts for each of these assets. We did not need that money. We reinvested it back into the economy, bought few more properties. And over the next 5 years, we had 8 such properties in our portfolio, consistently making 30K year over year in return. And here is a picture of one of such properties. We kind of consolidated as our strategy evolved, and we just have a couple left now. And this is one of them in Alabama. So, and while we were exploiting this strategy, we built a huge investor network, started our consulting company to help other folks aspiring to be in real estate, hung out with other like-minded people, built beautiful relationships, joined several masterminds, and learned how to identify good opportunities. And with this exposure, our confidence and acumen grew in real estate. So we identified an arbitrage opportunity. So this is around 2018, 2019. And at that time, a number of new communities were popping up all across the US. So next slide, please. And the housing prices was going up at a highly accelerated pace. So we started buying mid to large size single family homes in areas that were expected to appreciate quickly. Our strategy was to enter a community that's just getting developed and sell by the time the community is 80, 90% complete. So here is an example. We bought this property in Mountain House, California, when we found out that 4 different builders have bought land in this area and plan to build over 2,000 houses in the next 2 years. We were one of those early ones to get into the contract when the property was, I think, 40, little shy of 50% built. And by the time the property completed and we closed on it, it had almost doubled in value. So we got in contract for $695K. 6 months later, we had an offer of $1.2 million on this property. And we did the same in Austin, Texas, and a few other parts of the country. And since this was a high risk, high reward opportunity, having an exit strategy early on is extremely, extremely crucial when you're doing this kind of high risky, high reward assets. So our plan with this property was, just in case it doesn't appreciate as projected, can we rent it? And our main criteria was, we need to be positive cash flow in order to hold this property. So in Mountain House, we looked across and we found this, a layout. This is a casita layout. That was the only layout. And for people who don't know what casita layout is, it's 2 separate units or dwellings on the same property, like in-law suite, as some like to call it. this layout was giving positive cash flow. And this model, we also, as part of the equation was it's going to appreciate faster than other models in the community. So we only looked for this one property. We did not spend even a second looking at any other type of layouts and models. And we did this for 2 or 3 years. But then in early 2021, we reassessed our personal financial goals. And based on our changing family situation, economic market signals, we actually started feeling nervous about the economy. We felt like it's going to take a U-turn. Job market cannot be bullish all the time. It is going to shift. And we were like, this arbitrage type opportunity are seasonal. It's not a sustainable, reliable model. I was also having some challenging rough patch at work. I wanted to exit workforce. So all of those anxiety-induced, situations and all made us say, okay, so far we have done well. Let's now think a bit more from a stability standpoint and no kind of assuming one of us is going to, lose our W-2 job or will choose to leave the workforce. So finally, in 2021, we had a major shift in our strategy with that mindset, and we entered short-term rental vacation space. So next, thank you. This was the best decision we made in our real estate investment journey, as it expedited our exit path. We started consolidating our small investments, directed the money to these larger high-end properties. And again, I'm saying larger high-end because we know when economy goes down, some of these vacation rental people cut on their vacation. So we invest in properties which have minimum $500 a night kind of, offering. Most of my properties are $1,000 a night. And so just in 1 year, by having this shift, we went from 30K annual cash on cash to 300K. And by the end of this year, I'm projecting, because I'm adding 2 more vacation rentals, I'm projecting it's going to be over 500K, for us. And here is an example of, the property we went, this is my latest one. We went live in February this year. And within the first 7 days after we went live, we had 70K in bookings for this particular property. I have also added the Airbnb links here, and I'm going to actually just type it in the chat too, a little bit plug in over here. Please, if you want to thank me, just go and like this property or save it, because the more people like it or save it, the ranking in Airbnb and Verbos, goes up. So thank you. So far, so good. Let's talk about what's next. Next slide, please. Well, now that I have retired from corporate world, I have a lot more time in hand, and I'm taking my learnings, my experience to the next level. And that I'm doing with boutique hotel. So this is one of, honestly, the reason also part of the equation of leaving job was I had been studying boutique hotels for over a year, but I just did not have nerve with all the things I was doing. And my, I had an executive position in corporate world. I couldn't take on this, more. So I had to make a tough choice, and I decided I'm going to go with boutique hotel. So I am right now assessing 3 hotels. And actually next week, I'm going to 5 different states in the US to do a bit more of market research and kind of hone into, which areas I want to invest in for more vacation rentals and the boutique hotel. So this is just a picture. This is not my actual hotel, but hopefully by the time I see you guys next time, I will have a real picture. All right. So next slide, please. I think, at this point, we have, just when we talk about proximity, I want to just call out, I have personally bought, sold, or have helped family, friends, or mentees invest in over 20 states in the US. And so don't have that proximity thing hold you back. Just again, your network is going to be your biggest key. Before I go to any state, I have an investor friend or some known reliable source who I ask to go and look at the properties. And once they go, they video it, they provide me their initial assessment. That's the time I make a decision. I want to go forward or not. So again, your network, your tribe is going to be your biggest asset, and they are going to help you go forward much faster than you think you can. And the next slide, I think that's the last one for me. I've already talked about, we have high-end properties. That's the model that we are right now in. We have, reasonable revenue coming in from our properties. And through my investment company that I have helped over 130 plus mentees at this point with their first or second or, some number of investments. And several of these mentees are moving into vacation rental space with me. So next month, I am starting a mastermind for a closed network, specifically focusing on vacation rental. I know this is a lot about us. Let's talk about you now. How can you guys get started? Here is a simple framework that I honestly wish someone would have shared with me when we first got started, as it would have saved us some costly mistakes. And I just spoke about one mistake, but we have made a bunch of mistakes along the way too. So if you see this and everything looks hunky-dory, it's not. Again, human nature is to show the good and not the bad. And in the interest of time, I chose to show more of a good. But yes, we did make a bunch of costly mistakes. But here, this framework, I hope will help you avoid some of those. Number one is start with your why and what. What is your personal family financial goal? Choose your own path. Don't see who the person sitting next to you is going at that pace and aspire to just copy that person. You got to see where you are in this journey and what's going to be the right model for you and the right strategy for you. And if you're struggling with this, please feel free to reach out to me or Daniel. We are happy to help because you really need to get this piece right. And the other thing, this feels a little weird, but I want to definitely talk about the source of funding. This was another thing. You think, oh, we are in W-2, we know we have stocks, we are going to vest them, get some money. But having that clarity, especially when you're going to the lenders, what's your debt to income ratio and all those things early on will save you hours of drudgery later on. Number two is connection. This has been the single most important reason why we are where we are today in this journey. Having a right mentor who has your back will boost your confidence tremendously. Real estate is one area where you just cannot and shouldn't walk alone. As they say, alone you can go fast, together you can go far. And that's so true in real estate. And honestly, for the boutique hotel, after being in this business for so long, I'm actually looking for a venture, not for a joint venture or a partner or someone, not necessarily for money, but because I'm nervous about doing a boutique hotel all by myself. So you can see after being, in here for so long, I still feel like I need and I'm also joining another mastermind next week for just focusing on boutique hotels. Though I feel, given I have spent an year, if not PhD, I've already done my master's in boutique hotels, but I still want that comfort to build that confidence, honestly. And you got to have a team, a support network, be your CPA, asset protection lawyer, your property manager, lender, insurer, handyman, you name it. And again, your tribe is going to be your biggest asset. Having right set of people in different location whom you can ping and pick up a phone and call will really take you long ways. Next is action. Once you have the right set of info, data, and support, this becomes so much easier. Just be able to action on things. And again, tap into your network, rely on your people, your advisors to move fast. Finally, many of you may not be there right now, but make sure when you're formulating your strategy and you're coming up with a plan, add a checkpoint for assessment and adjustment. We actually took very long. We got very comfortable with good without knowing that there is an opportunity to get greater. The reason was, we were building this portfolio of small assets going well, 5 years, that's all we did. I wished I had an assessment point earlier on, and we would have moved into short-term rental a bit sooner than, when we did. But all said and done, take a lesson from our learning, and just make sure you have that. All right, next slide, please. So in the interest of time, I'm seeing we are 30 minutes shy of top of our hour. So quickly, I think you already know most of this, especially people who are on the sideline, just getting started. Here are some common real estate asset class that you want to consider. REITs is kind of a safest one, most passive one, easily liquidifiable. It trades like stocks. It gives you income in form of dividends. But on the other side, the taxes, just know your taxes with the REITs. I hear this people, after the fact, find out how this is taxed, what are the fees attached. You don't have very much control on the asset that is going to be in that fund and the market volatility due to interest rate movement. So it is a good passive way to enter the real estate, but just know what the downsides are as well. Next is single family homes. That's my expertise. That's what I have been doing. I buy single family homes, and then decide whether it's long-term, mid-term, short-term rental, or I want to go more cash heavy with this property, or I'm purely buying it from, appreciation standpoint. And I'm here to help you guys, if this is the area that you are more inclining towards. And then next is the multifamily commercial units. This is where Daniel's expertise comes in. Daniel, I'll let you speak to it.
Yeah, sure. So in these areas, as many of you know, these are group investments. So it's very different from long-term and vacation rentals. Basically, we pool together investors' money. There's anywhere from 30 to 60 to maybe more limited partner investors. And then you have a small group of people, the general partners, who are actually working on the properties and improving them. So in these scenarios, you benefit from scales of economy. You also benefit from the fact that these properties are evaluated or appraised rather on the income method of appraisal rather than the comparative method of appraisal, which a lot of single family homes are. So the big advantage here is that we can come in with a business plan to increase the income or decrease the expenses. And then that increase or decrease of expenses, basically raising of the net operating income, is what determines the value of the property. So rather than relying on pure market forces for driving the value of it, you can create a business plan and drive value into increasing the value of these assets. I've really enjoyed working with everybody here on this, and this is my area of expertise. And so you'll notice very strategically here, these two areas these two areas that Sha Den and I cover are the areas that we have heard the most from you about being interested in. So we very purposely, I went out and found Sha Den as a partner in coaching specifically to cover these areas well. And so that's why we're announcing our coaching program, which will be the first series of professional service that we're adding to the alternative investing club. There will be others to come, and I hope they make the place a great place for people to learn and continue to learn. Just looking here, actually, Sha Den, I shouldn't be looking at the chat right now. I'm speaking. I'll let you talk to the people there. So our mission here is to work directly with people that are busy individuals. And this differentiates us, I think, a lot, because most of the masterminds or community groups that I've been a part of have assumed that your full-time focus is going to be on real estate. When I was in Think Multifamily, many of the people that were there did it full time. There's probably maybe 30 to 40% who had a job and did it at the same time, but they were really doing both. And so this program is going to be focused on treating your time with respect and helping you to learn in a time-efficient manner. The goal is going to be to help you come up with strategies that best fit your family and financial goals, and to make sure that you know that those things are always top priority. It's about living a better life and to create a culture of ownership so that you can have a better life. All right, and the desired outcome by the end, you're going to know whether it's working with Sha Den or working with me. The program is designed so that you can find your right fit, and it's a program to help you learn about the strategies that are available, have some one-on-one time with us, and then to come out with a plan that you can execute on at the end. So the coaching program is going to have curated content, just like we're doing now, content where we're teaching. We'll go through in detail both the techniques that Sha Den used and that I use, so that you can understand how we got started. Both of us have been fairly seasoned in terms of being real estate mentors. Sha Den has worked with over 130 individuals, and she's had more of a traditional, I guess I could call it that. Maybe I shouldn't put words in your mouth, but she's coached 130 people, and I've really enjoyed being a part of this group and helping people out through this mechanism. So we both have had a fair amount of experience working with people, and we're committed to creating or helping you discover the strategies that work for you and help you create a personalized actionable real estate plan. So just to give you the quick overview of the program, it's an 8-week program. It's going to have 6 information-packed sessions and 2 half-hour Q&A sessions along with office hours, and then 1 working session where we work one-on-one with you in order to create your plan of action. Logistically, we know not everybody can make a particular time, so we're going to be doing the same content twice each week, once on the weekday, once on the weekend. And we highly recommend you go to the live sessions, because live sessions are, and interacting with people is how we learn best. And of course, we're all human, and reviewing that information helps us cement it into our mind. So the sessions are going to be recorded and be made available to you. But we really encourage you to go to the live sessions and not just rely solely on the recorded sessions.
And Daniel, if I may chime in, or actually,
Yeah.
Jump in. One thing I want to share with the group over here is I have been in a lot of masterminds. And one thing that I really struggled with is, as a busy professional, I never found a mastermind that was, convenient, time-wise convenient, and fit into my busy schedule. The mastermind I'm in right now, it's Tuesday, 9 a.m. PST, and I'm in PST time zone. So I paid like $25K for that mastermind, and I think in total, I may have attended 40% of the sessions. And yes, they are recorded, but let me be honest with you, just me, I never go back to recordings. I just struggle going back and relying on those. It gives me a peace of mind and cushion saying, oh, I have a recording. So my request to you guys is, and that's also the reason why Daniel and I are going to repeat the same content. There's more work on us, but we want you guys to have the most value out of it. So please don't rely on recording. That's just a backup for one-off situation. Or if you want to re-listen to the content that you were part of when we were discussing. But I strongly encourage, if you're thinking of taking this course, the most value is going to come when you can commit to being in the sessions, live. And that's where, again, the value of tribe comes. And you guys are going to start building relation and network with each other. We want each one of you to know each other, know your stories, help each other out, lift each other up. And that all happens in the live setup. Sorry, Daniel, you were about to say.
Yeah, I was about to say too that, making the Alternative Investing Club a world-class club means that we're going to be bringing in professional services. And I definitely want to get your feedback on that. I don't want to radically change the club so that people don't like it anymore. I want to bring in services that are really helping you guys. And so please give us feedback on this or anything that goes on in the future. I love to hear from you guys.
Cool.
This is our very long URL, realestateinvestmentforbusypeople.net. We do have the .com also, but we have DNS problems that go along with it. So, and that's actually true for Alternative Investing Club.net. We have the .com there too, but I'm having DNS problems with Route 53 on Amazon. So we also have the bit.ly link here and a QR code if you want to check that out there. And as a thank you, we actually have scheduled time to go speak at the Walmart and the Amazon and the Facebook clubs. But you guys are the first club we're talking to about this. So you've got first crack at this. We're only taking a limited number of people. So we're going to keep the club size small enough that we can all talk and converse. So we're offering a 10% discounted rate, which is currently on the webpage right now. And the price will be going up 10% on April 30th. So should we open it up for questions now, Chandani, or do you have anything else you want to say?
No, you covered it pretty well, Daniel. I just was making notes of some of the questions that were coming through. I was trying to answer some of the questions that were specifically tailored towards me, but I kept getting distracted by your talk. So I'll just answer them live. I'm more of a live person. But yeah, we let's dive into the questions. Somebody asked about horror stories. Yes, I think there's more horror stories than success stories. We just end up as a human talk about success more, but you guys are right. And there's a book, Real Estate Gone Bad or something. I can't remember exactly the title, but there is a book which I read a while back, which is all about all the horror stories. So yes, I am with you all.
There's a real estate podcast out there that does nothing but interview people and hear their horror stories and what they learned from it too. And it's not actively going anymore, but I can't remember what it was named.
No, I should be on that podcast because I had a lot of horror stories in our time. And somebody asked about squatters or something.
Well, hey, so we have a question. Will there be more sessions after the May-June sessions? Absolutely. We're planning on running this several times a year. So there will be other opportunities if you can't make it during that time. But we hope you'll join us during that time. And Isel says, could you share the pricing information too? It's all on the link. Ryan posted it right there. Let's see, how does someone know they are ready to be mentored? What is there, an old Zen saying about the master appears when the student is ready? No, I think really, if you're ready to take action, that's what really sets you apart. Many people learn and learn and learn, and it's hard to pull the trigger. And when you want to take action, that's when it's good to have somebody who's been there before and can help you out. So that would be what I would say. Any question?
Yeah, I was going to ask, from listening to all of this, it seems sort of advanced. I was wondering who is this? Who would benefit most from this coaching program? For me, recent college grad, kind of started late, and I don't know. I'm still very clueless on real estate. I'm renting a room right now. I don't have any property. So would this class be useful for me, or is it more for people that have done real estate but want to take the next step into being able to invest in all this stuff? So that's what I was gonna ask. If you understood that.
Yeah, do you want me to answer? Do you want to answer, Chandani?
I can jump in.
Both of you,
Sure.
Yeah, I can jump in. A great question over here. And the first series is for people who are fairly new and they want to even know what their goals are, what their strategy is, which direction should they even put their first step in. So that's really, it's going to help those people. But then there might be more seasoned people. They have done some investment and now they are not sure what's the right course of action for them going forward, which is what I was telling you. I did 5 years of investment and I can see myself still being benefited from this course because it not only helps newbies to get going, get off the ground, but also the seasoned people to pause, reassess, and see where they should be heading from here. Daniel, please feel free to chime in if I.
Yeah, it like you said, it's really focused on people who want to discover their own strategy. And it is true that we're both experienced, and so sometimes I have to mentally put myself back into the place of a beginner. But it's for beginners and also for people who want to step their game up. I know that we're past the hour mark here. Chandani, do you see any other questions here?
There were a number of questions. I'm just going to answer the one that people have asked about which markets, which resources. I know some people have directly asked about that. So for vacation rental, for example, my biggest go-to resources are AirDNA, STR Insights. I follow 4 masterminds, Mike Sjogren, Bill Faith, Avery Carl. Each one has their own strengths and weaknesses. So I know Avery has been a speaker on one of your previous groups. I prefer to sell through Avery, but I don't like to buy my vacation rental through Avery. So here's a little strategy over there too. So again, follow these people. They have great information, great nuggets of, information over there. But again, once you start, working with them or learning from them, you will see where their strengths are, where their weaknesses are. Same way, Bill Faith is great at marketing. I never follow him on where to invest. Mike Sjogren is really good in the boutique hotels. So you find your own niche by these different people, and they have their podcast out there too. But the number 2 source is data, data, data. I'm a big data geek. AirDNA, STR Insights, Rabu, those are your big data, websites.
So somebody's asking for us to put the links in the chat here, so I'll do that really quickly. And also, Dawn is asking if we have an outline of the content. And Chandani, I propose a Monday meeting in order to flesh that out and make sure that it's finalized. We can send it out. But we don't currently have the outline, although both of us have talked through it quite a bit. So we'll need to put that together and formalize it and send it out.
Yep, we can totally do that. We know what we need to do. We just need to put it on paper, so we can do that.
Great.
All
If you're
right.
taking requests, we can send some.
Yeah, absolutely. Of course. Feel free to email us. You know my email address, but you can also reach us at this email address here if it's specifically about the coaching. Otherwise, you guys can always reach me at daniel@goodsamaritancapital.com. All right.
Can I ask Shadney, one question. I don't know if she's still on it. It looks like I don't know if she dropped, but she mentioned that she met her mentor at a party. I was wondering, was that a real estate event or, and even if it's not, what is, I know you guys mentioned that networking is very important for real estate. So how do you find like mentors or events where you can network with people and then get, start finding people like in different areas of like the states where you can network with them and find that mentorship?
Sure. For that particular 10 years back or 13, 12 years back, that one was just a regular event and this person happened to be a real estate geek and all. But there are, fast forward now, there's so many avenues. There is like this club, like Daniel's club. This one is amazing place. You're going to find other people who are much smarter than you are or have been in this journey for much longer than you have been. Partner with them, take them out for coffee, just have a Zoom virtual meetup. And this is how it's going to start for you. Just meet, or you talked with us today, ping us. We will kind of talk to you. We will point you to some other direction, or some other person more relevant if we think there's a better match over there. So it's all with just talking with people.
So I'm going to answer one more question, and then I know I want to respect your guys' time and cut it off. We're already 5 minutes over. But Glenn is asking an important question that I think we didn't emphasize as much. Looking at the site, it's a class geared for those who are new to passively investing. What's the plans for continuing the masterminds on GPs? So I will say that I am going to be working with a group of people and coaching them if they want to bring limited partner investment opportunities and they want my opinion on them. So I will be setting that up. That's not the topic of today, but it's definitely happening. And then the other thing is I am putting together a commercial real estate GP mastermind for those who are interested in becoming GP or learning how to work in that area. And Sha Den is doing the same with short-term rentals. And so this part of the website, I think Daniel will help people who are wondering if they don't fit into the first one. There are going to be two other. There's a one-on-one mentorship program too, which we did not talk about today. And the other one is Meet Your Tribe and Build the Confidence. So you're right. You can see my screen, right? Yes, we can.
For those three programs. So you can email us if you fall in more in the second or third category instead of the first one.
Yeah, and Glenn, I know I've been promising and there are a couple other people who immediately spring to my mind, but I've been promising the multifamily mastermind for a while, and it's going to happen very, very soon here. All right. With that, thank you all here. Thank you so much for that card you sent me earlier. And we hope you have a wonderful weekend. We'll see you back here Friday at noon Pacific time, and we hope you have a great weekend.
Thank you, Daniel.
Thanks, folks.
Thank you.
Thank you, guys.
Take yourselves off mute, and thanks, Sha Den.
Thank you.
Thank you, Sha Den.
Thank you both. Thank you both.
Bye-bye. Bye. Oh, actually, one thing. Oh, shoot. I probably lost most of the people. Next week, I want to take a group photo where everybody is showing their video. So if you can, come and be prepared to show your video so I can get a group picture.
That's real risk-taking, Daniel.
I know.
applaud that.
I know. I should have plugged that earlier. All right. Bye.
Cheers.